What is happening, bulls and bears? Back with another dose of economic reality, and it is Sunday. It's August 20th, 2023, and we've got a lot to get into. We're going to talk about the overall economy. We're going to talk about what's happening over in China with the big slowdown, which is beginning in their real estate sector. We're going to talk about what's happening here in the U.S. With the economy, what we have to look out for as far as the dollar, the strength of the dollar, and all the forces being pushed against the dollar. We're going to talk about the dangers of leaving the bank. Yes, the danger of leaving the bank. There's a big uptick in a certain type of style or a certain type of method that people will be using to try to take your money from you. We're going to get into that and a lot more. We're also going to hear from people on social media, just the average everyday person trying to keep their head above water in this financial, very distressful time for a lot of people. All right, so let's go ahead and get started right here. By the way, you might hear my phone over here. It's going off here with the weather alerts. I'm in San Diego. There's a hurricane supposed to be hitting the entire southwest region of the U.S., specifically California and even Arizona. Right now, it's just a lot of rain. The winds aren't too bad. I'm about 15 miles inland, so it's a little bit worse on the coast as far as the winds go. But right now, it just looks like a typical rainy December or January day. Not really anything resembling a hurricane in my neck of the woods. So maybe I'm lucky. I haven't really seen reports besides just flooding, nothing as far as fatalities and things like that. But be careful leaving the bank. Here's a recent article, a few recent articles, but this has been going on since especially the beginning of 2022 with this big uptick in people looking to take your money in this particular type of way. When you're leaving the bank, when you're leaving the ATM, when you're leaving the ATM, also people could be watching you and following you. This is called jugging, not juggling, but jugging. Two alleged suspects fatally blank in possible jugging at East Houston business. This is just reports here for the last 2 days here. Two masked men blanked in possible jugging attempt. Another one here. It's gone rampant. A targeted blank strategy called jugging is on the rise. And, these are just recent reports here. So bottom line, as the economic situation here in the United States for so many people continues to deteriorate, you want to be especially careful and keep your head on a swivel and be, super hyper aware of your surroundings. And maybe now is not the time to be flashy and wear fancy jewelry. I just talked to a customer a few weeks ago. They got their home broken into and got a lot of jewelry stolen. Well, one, they should have had it in a safe. I'm not sure why they didn't. But two, if you're wearing a lot of flashy stuff, you're becoming more and more of a target now. I mean, just look at the uptick and all the people just smash and grabs, all these things going on here. So just a part of the overall economy. If the economy was getting better and not worse, you would see these types of incidents probably decrease, because when people are wealthy, when they're not worried about their finances, they're usually not doing these types of schemes to try to take your money from. And do you think it's just a coincidence that in other parts of the world where we see economic collapse, that at the same time we see big upticks in crimes and robberies and things like this, right? So, of course, not a coincidence, right? Real quick word here from our sponsor. This entire economic illusion goes back to the system of money that we have in the monetary system. So you need to look at protecting yourself with hard assets, right? Quick word from our sponsor about protecting yourself, about having hard assets. And on the other side, we're going to talk about what's happening in China and how this ties in with the system of money and hard assets here. Take a listen first. Let's talk about protecting your wealth. The US dollar has lost 85% of its purchasing power since the 1970s, when the dollar was decoupled from gold, and the government seems bent on continuing the tradition. From now until the next elections, the government can print as much money as they want. The last time they did that, inflation went up 9%. This means one thing: the security of your future and your family's future is all in your hands. Make sure you freeze the value of the wealth that you're holding. Invest in gold with Noble Gold Investments. Gold is the one asset that has proven to withstand recession, inflation, and just about all economic threats. Noble Gold Investments is here to help you if you want to invest in gold. You will also get a 24 karat 1/4 ounce gold standard coin for free. Go to bullboomgold.com now. That's bullboomgold.com, or simply call 877-646-5347. Noble Gold is the only gold company I trust. Link down in the description of this video. Recent article here, CNN. Evergrande's bankruptcy may be just the beginning of China's real estate crisis. And yes, a lot of countries, including China, saw what looked to be an economic boom. But when you look behind the scenes, the economic boom was based on a lot of lending, a lot of people borrowing money and purchasing items and property that they normally could not have afforded if it were not for the easy money and the system of money, right? So when money can be just created at the click of a mouse, you have the capability of inflating these bubbles and making the economy look better than it really is. When the supply of money or the creation of money is limited by being tied to something, for example, a weight of gold or silver or both, then you don't have economic bubbles and you don't have the dramatic or devastating inflation, that a lot of countries are seeing. But every country in the world right now is under this type of money or using this type of money, this type of quote unquote currency that's just created on a digital screen, at the click of a mouse, right? So this is the source of the problem. Yes, we like to report on the news here. We like to give you the latest information, how to invest, how to prepare for what's ahead of us. But we always have to go back to the system of money, the source of the problem. And it's going to be solved, I think, here in a few years. But what's going to happen before then? Are they going to try to force this digital currency on us that has all these controls and programmable money with the digital dollar, all these things? I think, yeah, that's coming first, unfortunately. But ultimately, I think in a few short years, we're going to see hard assets coming back in here. But let's get back into what's happening over at China and Evergrande, the real estate market. First of all, how big is real estate as far as China's economy? Well, it's pretty big. The industry accounts for as much as 30% for the country's economic activity. And it's, I think, even higher here in the US when you look at everything that's tied in with real estate, the loan officers, the real estate agents, the appraisers, the underwriters, the title representatives, home inspectors, the home improvement stores, the people that get paid, the contractors, right? It's massive, right? I've been telling you here, I think, for at least a year, how big of a slowdown we're going to see in different parts of the world, including here in China. And from this article here, after a brief surge in activity earlier this year, China's economic engines have been sputtering. Consumer prices last month fell for the first time in more than 2 years. Youth unemployment has been rising so fast, Chinese authorities simply didn't release the July data. Retail sales, export demand, and factory production are all down. Now, why is factory production down? Well, consumers are reaching the limit. Many consumers are reaching the limit on how much money they can borrow. Their credit card limits are getting closer to being maxed out, if not already maxed out. Banks are being more careful on lending because the guaranteed life support isn't there, especially for smaller and regional banks. Of course, the big mega banks, they have a guaranteed lifeline. So I think the big mega banks are going to be the ones that will keep the borrowing going because they have the guaranteed life support, with the money printer there, that they're likely going to continue to loan out money, continue to give people big credit limits on their credit cards, even though defaults and delinquencies are really going up very rapidly. And here's the meat of the matter here, in my opinion, here, out of this article still here. When the central government moved to curb excess borrowing and try to slow down the rise in home prices, effectively cutting off a major source of funding for property developers, folks. Key words right here out of this article: excessive borrowing. Excessive borrowing. When you have a system of money where they can just create endless amounts of money, you're going to see a lot of borrowing. And what happens when people can borrow money? Well, it's pretty simple. They can buy things that they normally wouldn't buy. And that causes the demand to go up, that causes prices to go up, that causes inflation, that causes bubbles, causes all kinds of problems. And it goes back to the system of money. That's why we need hard assets, especially gold and silver, to come back into the monetary system. And that brings us to what is going to be happening actually this coming week. We've got the big BRICS nations announcement and conference there over a few days. Do I think they're going to say, hey, everything's going to be all the money is going to be backed by gold? No, I don't think they're going to do that. Do you really trust these countries like China to do the right thing and bring back completely sound money? I seriously doubt it, but I do think we're going to see a bigger shift away from the dollar. And I think that's probably what the announcement's going to be largely concentrated around, is how they're going to be trading amongst one another, meaning the nations involved in the BRICS intertrading system. And it's actually about 40 countries, if I'm not mistaken. It could be even more by now. But I did read a report recently that it was at least 40 countries that are going to be involved in this. So this is huge. And will we see the price of precious metals finally unleashed, even if it isn't an exact gold-backed currency? We still could see the confidence lost in the dollar because of this, and this continued downward trend with the dollar. Now, right now, the dollar is pretty strong because we've only been comparing the dollar to other currencies around the world that are also completely fiat, fake, just created on a computer screen and not tied to any weight of anything tangible like gold or silver. So we'll be reporting on that as that unfolds here this week. So please come back to this channel for that. But right now, let's get into some other economic financial news here. Now, at first glance, this appears to be great news. U.S. weekly jobless claims fell, tighter labor market underpinning economy. So what did they fall to? And this is new jobless filings here just for the week, 239,000. So we're at almost a million still. If you multiply that by 4, roughly 4 weeks in a month, a couple more days than that, but 239,000 multiplied by 4, we're close to a million new jobless filings per month. So not good. And that's why you continue to see the labor force participation rate, not recovering even since the exiting of the health crisis occurred, right? So this is something big to keep an eye on. And what happens is these people go out, let's say a loan officer loses their job, they go out and get 2 part-time jobs, maybe one at McDonald's, maybe one at Walmart. That's chalked up as jobs added and looked at as economic growth. But when really a lot of people were in a worse position than they were before they got laid off. So the numbers are phony, and we have to keep reminding people of that here. What other economic indicators and bellwethers of the economy are out there today? We'll take a look at this here. Business Insider: consumers have spent all of their excess savings from the pandemic. That's just one reason why stocks are poised to fall. That's per JP Morgan. And we've been talking about this, how savings went up to an all-time high when people didn't have to pay all their bills, their rents, their mortgages, when they got all this extra checks sent to them. And now we've plunged from all-time high savings in just 2 short years since the end of the health crisis. Now we're back down to near all-time low savings amounts, and we're talking about the amount of money people have in their accounts, in their savings and checking account, at the end of the month after paying all their bills and expenses. So when will the stock market actually start reflecting, economic reality, and how consumers are, for the most part, either tapped out or already breached their credit limits, on their credit lines? We see delinquencies on credit cards surging, loan delinquencies increasing, and car loans and other types of loans. So it's just a matter of time. It's very, very slow. I've called this a slow motion economic collapse. Unlike a lot of other channels out there, I can bring up dozens and dozens of other channels with even real estate insiders and experts, quote unquote experts, people that are working in the industry. Even realtors have channels out here, and professional real estate agents. I can show you some of them right now on YouTube, that for the last 2 years have been predicting a real estate crash, a housing bubble going bust. And it hasn't happened, even though they work in the industry. So how can they get it so wrong? Well, I don't think a lot of them know the basis of the monetary system. They don't know how money's created, and they don't know that lending is the key to keeping this bubble inflated. So until we go back to sound money, or until we see a big pullback in lending, you're not going to see a major crash or even a busting of the housing bubble. Will prices continue to go down and soften? Yes, I think so. Could something major happen that shuts the world economy down and bring everything down with it? Absolutely. But then the question is, will they implement more forgiveness programs and rescue programs where people don't have to pay their rent, they don't have to pay their mortgages, and that would keep prices inflated and maybe even make prices go up again? I know it sounds crazy, but look what happened already in 2020, It's really not so crazy when you look at just a few short years ago. All right, let's head back out into social media land here and find some just everyday people and how they're feeling about the economy, how they're feeling about the cost of living, their incomes, and everything else that goes along with it here. Let's take a listen right here to this person.
About inflation right now, because I'm not quite entire. I don't know what to do. It's hard for me to even formulate words right now, just thinking about life. I'm not entirely sure what to do. I work for a really good company, and I still have to have a second job. And if I'm not careful, potentially a third. Now, I'm not entirely sure how the third's going to fit in here, but I got to make it work somehow. Some type of side hustle. I'm not sure, but it's crazy. And I don't know how anyone else is surviving out here. I don't know how everyone else is making life work right now.
That's one of the biggest mysteries, just to pause it here for a second here, is how are people paying these rents? How are people paying their mortgages still? Well, it is a lot of side hustles. But when the consumer gets tapped out, the money you're making on the side hustle is going to start dropping. And a lot of other things are going to start dropping too. So it all comes down to the consumer. Your side hustle being successful depends on having customers with money to give to you for your for your work. And when customers are so far in debt, when the economy's tapped out on debt, when consumers are close to being tapped out or tapped out, things start slowing down, right? So let's continue to listen here.
I'm not sure how anyone's out here grocery shopping. I'm not sure how. I just don't know. I really don't know. I don't know what we need to do as a collective, as a people. I'm not sure what we can do, but I just know something.
Let me pause it again. People know something's wrong. People know that this is not normal, that it's not supposed to be a struggle day to day just to get by, just to survive, just to pay the bills. You're not supposed to be stressed out about finances. And not everybody's stressed out, but a lot of people are. When you look at how many people are living paycheck to paycheck, the estimates range anywhere from 63 to like 72% or something like that. If you look at the surveys on the amount of people living paycheck to paycheck. So people know something's wrong. They just can't pinpoint the problem. You know what the problem is? It's this system of money, the monetary system, the way that money can be loaned out. And that creates all this demand and inflation. It's pretty simple. We need to go back to hard money, but most people don't know this. And I'm not making fun of anybody for not knowing it, because it's not something that's taught in our schools. It's not something on the news. You have to find a channel like this and probably a few other ones out here and YouTube world, talking about this. Otherwise, you're not going to find too much of this type of information or this type of view.
Something needs to be done. Something has got to give. Grocery shopping is probably the worst errand I have to run, because everything is just astronomically expensive. Everything. Like I've cut out subscriptions. I don't eat out. And just as soon as I get my paycheck, once bills are paid, it's a wrap. It's done. I have nothing left. And I think I've cried all of the tears I could cry, at least for this week. I'm not sure anymore, guys. I truly have no idea how we are surviving. And the thing is, you can't even just say, oh, I'm gonna leave the country, because where are you gonna go that you also can afford to? Because everybody, literally everybody, is going through.
So worldwide problem. That's why when I see these people just blaming one person or blaming the current leader or whoever's in power, that's a joke. And I'm not happy with the people in power. I'm not happy with the way things are being ran. But you think replacing that person with some other goofball just following orders is going to really fix this? No. And she said, you can't really go anywhere. The entire world's under this system of money, inflation, the system of lending, the banking. It's very similar. It's all fiat, fake, digital dollars.
Can't go to Canada. Can't go to the UK. Everyone is dealing with just not being able to sustain life. And it's really sad. I wish everyone out there the best. I'm here in good old Tennessee, going through the same shit you guys are.
All right, so there's a lot of people out there like her, and we see, younger people especially affected by this. Now, some of the older people, not really old, but people in their 40s, 50s, 60s are saying that, these millennials, they're the problem. I don't know if they're the problem. They haven't been taught, the way money works. They've been taught that, you need to go to college, get an education, take on tons of debt to get your education. That way you could get a good job and live, a great life. But even that has people buried under debt, people worried about making their payments, but at the same time, yeah, there's a lot of people out there wasting money, not being frugal, not watching what they spend. So it's really hard to, just say it's this or that when it's a combination of a lot of different things. But as you heard, from that person there, that they know something's wrong, they just can't pinpoint why it's happening and why it's happening globally. Not too many people know. Not too many people know exactly the source of the problem. All right, now I've got another one for you. Then we're going to get out of here. Listen to this person's take on just the cost of certain items. He's going to be talking about Target, and look at some of the items that he pulls up here. Take a listen.
Babe, the Target CEOs are on crack again. Look at these prices. Just look. Just look. This is $20. My finger for comparison. Maybe 3.5 inches. For $20, they're selling this shitty small basket. Again, finger for comparison.
Sorry about the cursing. Look at these small plants for like $20. I mean, come on, this is a joke.
$10 for this teeny tiny fake plant that I can fit in the palm of my hand. By the way, I don't have big hands. This is dollar store crap. Again, tiny plant, $20. This one's maybe like, 8 inches tall, $30. This is the most dystopian thing I've ever seen though. So if the national minimum wage is still $7 an hour, you would have to work for over 3 hours after taxes to be able to afford this tiny fake plant. Babe, the Target CEOs.
Right? So people know something's wrong. First of all, who's to blame? Is Target to blame for charging these prices if people are out there spending money for these things, right? Obviously, if they weren't selling these, they would just have to lower the price to get rid of them or put it on clearance. But people must be still paying $20 for a. He showed it to you, a little plant that big, fake plant. So when people spend money like that, um, you know, big problems, right? Until we fix the source of the problem, this is not going to get fixed, right? So what can we do? We can look for investment opportunities, continue stacking, continue to be prepared for the big shutdown, which I think could happen any day here, because they need a way to cover this economic collapse up. So if they go to war, or if they have some sort of maybe the grid goes down, or the entire banking system gets hacked, then they'll have the cover for the economic collapse. They don't want to blame their policies. They don't want a lot of people realizing it's the system of money that's led up to this. Yeah, there's a lot of people spending money that shouldn't be, but you can't put the blame on them alone, because they couldn't spend this money without the ability to create this out of thin air, on a digital screen, right? So keep stacking hard assets, have 30 days living expenses and cash out of the system, because, something big could go down any day. Until then, slow motion economic collapse, folks. Keep stacking, keep preparing. Hope you guys like this video. Big love. Bye for now. Peace.